what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, I mean, think about this. Think about how investors are selling banks and actually buying Bitcoin.
The month of March has been an eventful one. We are faced with the reality of the serious damage the Fed's interest rates hike can do. Two major banks are already down, and Silvergate, a foremost cryptocurrencies bank, has also gone down with the pack. Is Bitcoin safe? What investments should we be considering as safe havens at this critical time? These are the questions master trader Gareth Soloway answers in this video. And what next for Bitcoin at this time? If you are new here, subscribe and turn on the notification bell so you always get the best market analysis online. First, let's have a recap of recent events.
Let's get into the charts, guys. We got to analyze some chart action here. We basically had, by the way, PPI data this morning came in better than expected, meaning it was lower. It actually dropped 0.1%. And what that means, folks, is that inflation on the producer price side is coming down. You would have thought that the markets would have rallied a little bit. Didn't really happen that much, but nonetheless, we are starting to rally a little bit off the lows right now. Now, this is Credit Suisse's chart. Look at this. This is your weekly chart. All right, now Credit Suisse is below this key trend line. If we go to the daily chart, look at this. So let me rephrase that. Let me get that back. So look at how Credit Suisse, and this is, by the way, not even including pre-market data. Pre-market data, we're down basically sub $2 down here. But we notice how we broke this long-term trend line to the downside. When you're in a bank stock and you see that type of break, that is not good. Not when you're seeing a break like this at these lows. Because you know what this says to me? It says that there is a risk here of them basically being taken over by the European government. All right, when you have a break like this. Now, if this trend line held, I'd be interested in buying it. But look at over the last couple days how it went below. That is not a good sign. I don't know if they'll get taken over. Maybe they'll get backstopped by the European Central Bank. But either way, it is not a good scenario here. All right, next up, let's take a look at the dollar. I want to take a look at the dollar today. We know that the PPI data just came out. The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? I mean, riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do in a normal scenario. If the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the US markets.
I know investing can be a total roller coaster ride. 1 minute you're up, and the next minute you're down. It's like trying to predict the weather. Unpredictable and frustrating. It's enough to make you want to sell everything and run for the hills. But wait, don't give up on investing just yet. Equito, led by the multi-talented Luca Gubbo, has got you covered. Equito is a platform that offers crowdfunding and private placement investment opportunities, as well as resources and courses for both beginners and experienced investors. My friend Luca Gubbo is a total whiz when it comes to investing, with a long list of accolades to prove it. And let me tell you, their online course is a game changer. Their course covers everything you need to know about becoming a successful long-term investor without losing your mind or money. You'll learn about asset classes, funds, risk management, diversification, company analysis, technical analysis, and more. Plus, you'll receive bonus videos, workbooks, and access to a private investor community. Now, this course is not for everyone. If you're looking to day trade or get rich overnight, this course isn't for you. But if you're a high earner with some savings who wants to make sure your money works for you, then this is the perfect opportunity. Cost for the course is 1,200 euros. And for a limited time, I have asked Luca to offer a 25% discount, specially for our channel subscribers. Use this promo code, WealthyValue25. So, Don't wait another second, my friends. Invest in yourself and take control of your financial future with Equito's Masterclass. Trust me, investing in yourself always pays the highest dividends. The link is in the description. In January, the month-on-month PPI report showed that inflation on the producer end rose by 0.7%, which is a lot at a time like this when we are looking forward to a positive turnaround in the economy. So, when the latest PPI report showed the rate had reduced by 0.1% last month, it was a win that we were all excited about, even though it was very small. Year on year, the win is even bigger, dropping from 5.7% to 4.6%. Now, that should have some big impacts on the markets. Unfortunately, the recent bank failures have overshadowed the effect of the declining inflation rate. The US dollar should have declined along with the PPI, but it instead gained on the FX market. This is because investors are in search of a safe haven. The US dollar particularly gained because Europe is on its toes. Credit Suisse showed serious signs of failing, but was saved by the quick intervention of the Swiss central bank, which resulted in UBS finalizing taking over Credit Suisse.
Right here, this was resistance on Bitcoin. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. That hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, think about this. Think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring, because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. Now, granted, it's got to go through growing pains. We know that. Growing pains, yes, every asset does in the beginning. It's only really 14 years old. Bitcoin is a baby, basically a teenager at this point. So you have to let it go through growing pains.
This concerns us because these events have played a huge role in how the assets market reacted recently. The moment these banking crises are resolved, the markets would change. Next, Gareth talks about Bitcoin. It was really unexpected that cryptocurrencies would rally at a time like this. We just lost two of the biggest banks supporting crypto companies, and yet the cryptocurrency market boomed afterward. This has got experts wondering why this is happening. But as Gareth Soloway said, this is exactly why Bitcoin was created. Remember back in 2008 when the global recession started? It was caused by the failure of the banks. The next year, in 2009, that was when Satoshi created Bitcoin in response to the banking crisis. It was meant to give individuals the power to control what happens to their money. Current events remind us of this, and we see the market responding accordingly. But would it last? So, what is Gareth's prediction for Bitcoin? Despite Bitcoin's impressive rally and crossing a 9-month high, Gareth Soloway is convinced Bitcoin is going to fall back to $18,000. It is reasonable to think this way, as there are likely more troubles to follow, especially when the Fed announces another rate hike. There is a big chance that we could get another 25 basis points rates increase from the Fed despite the hardship the banking sector is facing. The risk is far from being over. If you invest in crypto, Forex, or any assets at all, then you need to subscribe to this channel now. Don't take blind risks. Stay informed. Adios, and thanks for watching.